Okay, I just want to point something out real quick. Oh god. So OZM. Um, let's see. So if you remember correctly, what I should have done to make it more clear is put a sell signal, but because I didn't put a buy signal here, I didn't do that. But from now on, I will put a sell signal to indicate um, whether I think it's a good or a bad idea. So let me move this down some. So, get out of here. So what I presume is going to happen. First of all, there is no wick down here at all, so there's still high momentum in terms of the descending price action here. So you do have the $3 whole dollar psychological here is usually pretty strong. You can tell that there's some consolidation every time the $3 hit. So the reversal is going to occur. In my opinion, is going to occur around the $3. So right here. So if anything were to happen, my buy signal would be around here. Okay, so you got to wait for that confirmation candle to occur as far as OZM is concerned. If you bought yesterday or even today, that's just a very bad idea. Now, I know that I said there was a pendant consolidation, and being so close to the 200 EMA, that there was a running potential for it to go back up, considering that the volume was a little higher right here. But you also have to understand that there's an earnings report. Now remember LCSS, that's just backing my reasonings as to why I don't ever trade earnings reports. Earnings reports can go either way. It doesn't matter if you think that the company is doing good unless you do your research, like an insane amount of research. Like for example, AMD I know very well. So if there's an earnings report that's going to show up, I know that earnings report can either go up or down within a set parameter or a set probability. But that just because you make a prediction that it's going to go up, or other fundamentalists do their own analysis and predict it going up, doesn't mean that it's going to go up. Because what if their debt has increased because of some new contract deal with, let's say, Global Foundries, and per chip the manufacturing cost is up too high, and you failed to calculate that into the overall revenue stream. Like all of these things have to be calculated prior to the earnings report, because it can make the stock look less valuable because of the increased debt. So that's just an example for OZM. OZM, I will be taking a look now. If you remember OZM, I was like, I'm really hoping for it to drop back down to this area, because the profit margins are going to look much better. If we bring it back to the original price, then that's 24%. So that is looking really solid. So I'm gonna set this not as blue. Let's put this to red. I'm gonna clean up this everything here. So that's looking a little bit better. Let's make this a little thinner. Okay. Let's make this green as far as support. So this is going to be your overall long-term support, okay? As far as a few months is concerned. So that's going to be OZM. I do want to take a look back at, which one was it? The FSC. I think I was looking for a rebound on that one, which it did occur. This one is going to be a little odd, because if you look here, it found some support right here. So if you retrace this, it's looking pretty solid in terms as far as a lateral line. So you can tell just based on the retracement back to the historic support, you can tell yourself, well, it may find some resistance here, and then you retrace it back. If you look at the lateral line right here on the T mark, and you can just be like, okay, it's most likely going to find some resistance right here. So some smart buyers found, so a lot of smart buyers, oh my god, how do I turn off notifications? Hold on. Options and okay. Alright, so that should work. Alright. Okay, so a lot of smart buyers could have seen this as a point of reversal. Now I tend to wait for a confirmation candle. A lot of buyers tend to risk it and buy in to increase their profit margins. I don't do that. But you can see here, there's some more support back here. So you know, people are writing this up and they're making 5.35% roughly over the course of 3 days, which is, you know, really solid profit margins. But if you combine that with a Fibonacci retracement, let's say like at the very, very top, let's say, you do that, you can see that it is finding resistance right on the 38.2 Fibonacci retracement. So I am not surprised at all that this is occurring the way that it is. You know, it's just simple human psychology and doing your retracements proper. So this one is another example that we could be looking at. What's the other one? Let's just go through the list here. So INFI. I'm just going to go through these really, really quickly. INFI still got that consolidation period. Nothing we need to be worried about. Set your alerts, and you're not going to miss any of them. OPXA. OPXA is on the downtrend. We don't need to be worried about that anymore. You know, this is the typical coilover type of pattern. It's simply coiling here. So this one we can keep an eye on for that uptick. ENDP is one that I have been talking about for a while. So this one is back on watch simply because it seems to have broken through this point of resistance, because it was rejected here, coming back down. You know, with the increased volume, it was accepted and finding some resistance right on that resistance line that I drew like a month ago. So this is looking pretty solid as far as I'm concerned. This is looking really good. Formation of the doji just suggests a downtrend. So I wouldn't be playing this right now. I'm actually going to put an arrow right here that indicates the turnover here. So, and bear in mind that I'm putting this here at 9:20 a.m. So this is likely to change if the momentum follows through. Now do bear in mind, again, we have an earnings report coming up on the 28th. So if you're planning on playing this, just make sure you get out of position before earnings report. Or if you did your research, play it according to your research. So as far as ENDP, that's all I'm going to say. VGZ, I do want to note that gold is looking towards an uptrend. It's looking like it's going to head back up. And this is what, as far as mining goes, this is a company that has extremely low debt. So I do foresee this going back up. Is this an earnings? Yeah, so this is something to look at for a little while, at least until the earnings report. I'm not going to buy anything just yet, but we do have this consolidation period with some uptrend here. So let's see. So we got this going on. So if it does retrace, I would take a look like this. So if it does retrace after the earnings call, it could retrace back to here, or even do what NDP did, or I mean FSC, no, OZM. So it could do like OZM and retrace back to this area. It could even retrace back to a lateral resistance, if you will, because you know it could retrace all the way back down to something like this. But that's where you should set your wary points, you know. But if it does fall under the dollar mark, then I'm kind of disinterested. I don't like stocks that fall below the dollar mark. So let's see. HK I think was looking pretty good, if I remember correctly. Okay, so HK, we're just gonna wait until these two dojis were just kind of a confirmation of the reversal. So this one we're just gonna wait until it retraces back to something a little more favorable. I just want to bring up GSAT. GSAT's still going through its uptrend. If you remember correctly, I put the buy signal here. We got a little bit of a doji, and this could be signs of a reversal. So I may consider getting out of position here, but you know, so it really depends on what kind of volume we're going to get. But I may get out of position just because of this associated low volume here in the earnings report coming up. I'm kind of getting disinterested in here. So that's GSAT. I think RAD we already talked about. So if you were playing RAD, if you looked back at my videos and you were like, well, he hasn't talked about this in a while, but that's simply me just forgetting. And I brought it back a couple days ago, but you know, these consecutive dojis again, trend reversal. So you get this trend reversal, you get a buy signal here, going back up. You sell 50% here because it seems like it's going to go back down, and then because you held or sold 50%, you know, you're still following the uptrend. So you still have a 50% margin in terms of your position. So you're still riding the wave back up. You know, you're still holding your position. It's just you're reducing your risks of not taking any profit. So it's called scaling out. So you know, on your way up, you scale out. You're reducing your chances of losing those profits. So BBRY, let's take a look at how this one's doing. Okay, so we got a consolidation period. I'm still waiting on it to go back down. AMD, let's look at AMD just because, you know, I always look at AMD. AMD, continuing consolidation period, has finding some resistance around the $13 mark. So this could be interesting. We have this consolidation period with that reduction in volume. You know, it could start heading back up here pretty soon. So I'm really curious about this one. You know, but I would probably set my alert around the $14 mark just to make sure. Maybe even the $13.50, that psychological 50 could be interesting. So Twitter, I brought that up earlier during the week, I think on Monday, and it's Wednesday now, so 3 days ago. Okay, so it is finding some resistance right here. You know, like I said, because of this long-term trend, I'm not surprised that it's finding some retracement, especially if you do some Fibonacci retracement here. It does seem to add up pretty consistently. So you do have this hammerhead up top. You know, I'm not surprised it's coming back down. It could retrace. It could. Yeah, I think it's going to retrace back down to something here, and then you know you could ride the wave back up. So Twitter is another one for the future to look at. God. Anyway, PFE I want to look at. You know, holding a position from back here, and we got the signs of a doji formation right here around the 200 EMA. So what I would consider doing is right here, I would set this to a 50% arrow 3. Anyway, so I would set this to a 50% sell signal, you know, because just the way that it's been acting, you know, you could have something that looks a little bit like this candle, you know, that shows it has some selling volume, but you know, going back this much, like to 33.2, like giving away 1 whole percent may be significant if you're gaining like from like say here, you know, if you're making 6.5%, putting back 1% seems like a lot, but at least you're still taking in profits from the 50%, and you're confirming the trend reversal. So one, if you hold, you do run the risk, well, not the risk, but you do run the probability of riding another momentum past the 200 EMA. So this could get really interesting if it does manage to break above that. Now what I failed to draw is the overall trend, and the overall trend I would say is somewhere like this. So this candle, alright, here we go. So this candle was very momentum-y, if you will, because it is breaking through the overall momentum here. I forgot to point that out last time I was making the video. So, you know, because it broke through and the overall momentum is going like this, it's not enough to just draw your lateral lines like I've been doing. You have to look at the overall trend. So, something like this, I'm not surprised that it's acting the way that it is. Let's bring this down a little bit. Okay, so, you know, I could foresee a little bit of a consolidation period. So, you know, you could see some lateral trading that's going to look something like this. you know, lateral channels for a little pennant consolidation, if you will. Oh, come on. So I'm not ready to get out of position just yet. We're just going to see what it does, where the movement's going to take it. So overall market right now, I do believe is going to be a little down. Just with the way everything has been developing, I would, yeah, see. Because I'm looking at my watch list, and most of everything is, well, 50% of it is in the red, and that could just be an indication of the overall market. So, you know, we were due for a little bit of reversal. The market crash that everyone is talking about, that's not for some time. I don't foresee that shit happening. Like, if you were to trace back to 2008, you know, it is something that I would look for, especially with all the deregulation. We're going through the same crap that is going. So if you have positions, you know, just always have your stop losses in case something happens. But right now, S&P 500 looking like it's going to be a down day today. But who knows? It could do a little reversal. SPY, something like that. Yeah. So same thing. Dow Jones. Let's take a look at that one. I wish I could look at the Dow Jones Industrial Average, but it's not letting me load it for some reason. I don't know why it's doing that. DJX, I guess. Let's do that. So Dow Jones. So yeah, everything looks like it's doing a little bit of a reversal, so yeah. Anyway, so that's about all I want to talk about. I hope you learned something. But that's it. See ya.